Well, today is the 13th of February 2024. Agustin Vera here. Thanks for having me. We know the release of CPI data in US, so the numbers are here, the information is ready, and we have to start to develop all this analysis on this one. For a start, remember last month unemployment data was 3.7%. It's very good. It was excellent number. We also know that GDP, which was 3.3%, and this doesn't need to say that GDP is still improving. So anytime or more, we are far from the recession spectrum. And then the last of January, we know that the Federal Reserve Committee and the market are pricing right now, they only have a 36% chance the rate cut in the meeting for the next month in March. The expectation now could rate 6 or 7 times in 2024 maximum. But the more interesting thing here, that's the number cut expected for 2024 is now less than before. All because Jeremy Powell, remember, said that they don't feel comfortable with the actual rate of CPI or inflation in the US. Last month of December, inflation and this number shows that the CPI is no less than before. But the most interesting point here is the behavior of energy into the CPI. The energy price fell in December compared with December 2022. And then we know that the gasoline prices in December compared with December and 2024 also decreased in the last 12 months. Electricity, in the other hand, shows a little increase compared with the 2022. In the most cases, the last quarter of 2023, inflation shows the energy price that they start to decrease. But if you see the performance here on natural gas as falling in February, but please see the performance of these energy commodities in January. You see the crude oil, and gasoline start to increase the prices. For the situation in the Middle East. On the other hand, the natural gas has started to decrease, and the price of natural gas has lost nearly to 30% since the beginning of the year. So as we know, the inflation rate was 3.09%. The market was expecting 290. So this performance is above the expectation, where the biggest contribution and index of shelter, which continued to rise in January, increased by 0.6%. This year, highest contribution to the CPI is 2/3 of the monthly increase in January. So the housing prices started to increase, but you see in this month, we don't know the affectation or contribution of the energy price that, as I showed you before, started to rise. You see the gasoline here. In this part, I want to inform you that we have to check in detail what will happen all the energy-related commodities in the near future. This is the first point. The second one is the PMI, ESM PMI index. has historical is a leading indicator for CPI inflation. The ESMI PMI can predict the performance of the CPI in the most cases 3 months in advance. As you see this chart, the ESM, we know that last month started to increase here, nearly to 60 points. That means that maybe CPI start to increase in the following months as well. So we have in the next section, in the next season, to have to check that will happen with CPI in detail. Another critical point to take the time to be aware for the future performance of S&P market is the pull call ratio on CPI, CPX of S&P 500 options. This pull call ratio is the indicator that shows you the trading volume between the put option related to the call option of S&P. The highest pull call ratio indicates the bull sentiment, and the lowest pull call ratio indicates the bearish sentiment. The investors maybe in these times have here near to 0.55 here points of pull call ratio show us the market can more near of retracement. So be careful with this ratio. Is a very good indicator that maybe we are near to retracement of the market. The next point is this one, the fear and greed index calculated by CNN. Now 78% of the people feel very comfortable with the performance of the market. But when you see the historical performance, when most people think to place it with the market, like in June last year, market may see a retracement in the following months. So at this time, we are near to 5,000 points in the S&P. And another way, most significant people feel comfortable. That means that we may see a retracement in the near future in the S&P market. Be careful. Okay. This week we have a little information, not too much information about earnings. The most important earnings for this week are Airbnb and Robinhood this afternoon, but the rest of the week we have another companies. These companies have less participation of S&P 500. So we can see what happened in the following weeks. Now we will see the reaction of the AI portfolio related to the markets of all this news. First of all, we have excellent performance until night of January. We have 551% compared with the S&P. That's only reached 377%. Above us only are Cathy Woods 9.21% and Charles Schwab 6.10%. So we are in the third place in these first days of February. Remember, historically, we have up until 31 of January 149%, compared with the S&P that only had 83%. Until this morning, we have yet no, in the technical view, let me show you here. Until this morning, we don't have yet bull sentiment in technical analysis, but after CPI data, all changes. So be careful. Remember, we use GTI indicators for our technical view. We have these indicators to help us to have a technical analysis of our portfolio. On the other hand, we have last week when we were more than 40% of in the technical sector. We reduced until 32%. And the second one is telecommunication with only 15, and consumer non-cyclical 15 as well. Our more important assets in our portfolio are Microsoft, Meta, Apple, Google, and Berkshire and Hathaway. Now, let's move to some performance metrics in our portfolio. As I told you, we have a performance of 551% compared with the 357% on our portfolio. The last year we have this year accumulated the last year we have 49% compared with the 25% of S&P. The top contributors to our portfolio are Meta, Nvidia, and LLA. To finish, just remember the most important news this week: the release of inflation data. We see the interpretation of the whole analysis of markets of this data. We have many tons of analysis and information related with CPI. We also have Airbnb earnings this afternoon. And to finish the week, we have PPI and retail sales the next few days. Our general expectation that the same to the last week is cautious. So be cautious with this old information. Just remember, read the disclosure. Thank you so much. Thanks for having me. Have a nice week. Thanks for joining this webinar. See you next week. Bye-bye.